Good evening and welcome. You're watching ET Now Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Ruchi Bhatia. We have a power-packed show lined up for you over the next 20 minutes. And the top story this evening on Startup Central is, of course, one of the earliest and most influential investors in the startup ecosystem. Lee Fixel has quit Tiger Global. Remember, Fixel is known to have placed a lot of bets on India. He was very bullish on India and has placed early bets on the likes of Flipkart and Ola, apart from driving investments into the country worth close to $2 billion. In fact, let me take it across to my colleague Rahul Dayama, who's also joining in. Rahul, this definitely comes in as a big loss to India, but talk to us about what does Lee Fixel going really means for not just Tiger Global, but the kind of investments that Tiger Global had in India.
Ruchi, you're right. He has been one of the most powerful and influential investors here in the Indian startup ecosystem. He was one of the earliest investors in Flipkart. In fact, was with them throughout their journey in the last 13 years. They did go under a lull in 2015, but he's also known to have credited to have got external investors on board for Flipkart. Not that that's not it. Apart from ensuring that a steady flow of capital went into the company, he played a pivotal role as far as the Walmart and Flipkart acquisition is concerned. He not only negotiated the deal terms, drove it from here. There were counter offers from Amazon. SoftBank was not willing to, but he ensured that the big exit of $16 billion is something that Flipkart gave to several investors. Remember, from the deal itself, Tiger Global made about $3 billion, which is considered one of the largest exits that they have had anywhere in the world. As you've rightly mentioned, Tiger Global has pumped in about $2 billion in the Indian startup ecosystem. In 2015 is when they sort of slowed down the pace of investments because Flipkart, their pet investment, wasn't really doing well. But post that, really, they have started taking bets. After the exit, we've seen them be part of the funding round in Ola. They have, of course, invested in other startups like of Hike, Nestaway, Delivery. They had early exits in Jestile and NSC also. So Lee Fixel has really been at the center of all of this, driving the strategy. We'll have to wait and see how much of the money from his new fund really comes back to India. That's something we'll have to wait and see, but seems like the strategy for India will definitely get impacted with this high-profile exit.
Absolutely, prominent bets were being in India. Rahul Dayama, many thanks for joining in. Let me also discuss the story further. Joining us now from Bengaluru is Rahul Chaudhary. He's a partner at Stellaris Venture Capital. Rahul, thanks for joining us. Firstly, let me ask you, how do you see Lee Fixel's contribution to the entire Indian startup ecosystem? We did hear Rahul Dayama talking extensively how Lee Fixel had played a huge role with respect to investments that were made in India. But what about things now? He made a lot of interesting bets early on. But how do you see things really shaping up now with him going?
So, I would credit Lee as, in some sense, somebody who created e-commerce industry in India, while Flipkart has become a very large entity. A large part of that credit goes to, I think, his belief on how large this business could become. And that paved way for a lot of late stage investors' interest in India. It also showed founders or Indian founders what scale really means. Having said that, I would assume that now, there are a lot of other investors also who are around. I'm hoping that Lee, if and when he creates his own fund, will still be interested in India. So we should continue seeing his involvement in India. Obviously, I have no idea whether Tiger will stay interested in India. They have a lot of interesting investments, existing investments like Freshdesk, Ola, and several others. So clearly, as they reap those benefits, hopefully the interest in the geography will also stay. Yeah, but I would assume that, now we have a lot more late stage investors available. So it is not like, I would say 2-3 years back, or maybe 3-4 years back, it was almost as if, you need to reach Tiger to get to next stage of company. scaling up. That option has clearly broadened up. Large part of that credit goes to Lee itself.
Absolutely. But who do you see filling this void? I mean, you know, while Tiger Global's pace of investments have really come down, they're still one of the largest investors in the ecosystem. Will it be an Indian VC in that case?
So, Indian venture capital private equity firms have not yet reached the size. We are seeing a lot of Series B and C focused funds being raised. These are typically between $300 to $400 million. So they are not yet there, in terms of investing 50, 60, 70 million dollar in one go in a startup that you believe in. Clearly, as an early stage investor, I don't like that all the startups depend on one single fund. So I would rather have it, where there are multiple such options available. We see a lot of funds from China or corporates from China getting interested. Clearly, SoftBank is there. A lot of late stage investors from US were interested in India. So hopefully, no company or no investor should depend on one single late stage investor for the scale of the country.
Absolutely, but how do you see, the Indian entrepreneurs looking at this when the likes of Nikesh Arora, other bullish investors have also quit SoftBank? I mean, they ended up clamping down on investments here. Tiger Global had just started getting active again with newer bets like Ola electric segments.
So see, something like this doesn't happen overnight. I'm sure, there must have been some plan or exit plan or timeline that they would have been thinking internally. Given that they were still making investments in India, my assumption is as a fund, they still stay interested in India. Hopefully we'll have somebody who'll focus on India on an ongoing basis. But again, as I said, there are several other funds. SoftBank is, investing in multiple companies in India, even if you look at last 1 or 2 years. So they have been very bullish. A lot of investors from China who are very bullish on India. Right now, more corporate. My assumption is over time, more funds will become interested. Funds like Shunwei and all. Lightspeed from Growth Fund, Global Growth Fund is investing in India. Excel Growth is investing in India. So I think the funnel at or in terms of number of investors investing in late stage, the options has clearly gone up for any company looking beyond Series B or C stage investments.
All right. On that note, Rahul, many thanks for joining in and speaking to us on that matter. Clearly, now that space is open and needs to be seen how Lee Fixel in his new venture will look to place bets on India. With that, we take a short break here. We will come back with more news stories on the other side. Welcome back. You're watching Startup Central with me, Ruchi Bhatia. Straight up then, social media giant Facebook is continuing to tide over tough waters after facing data privacy scandals and issues of fake news. The company has witnessed 2 high-profile exits. The chief product officer, Chris Cox, and WhatsApp's VP, Chris Daniels, have quit the company. Let me discuss that story further with Gurshabad Grover, the senior policy officer at Center for Internet and Society. Gurshabad, we have seen how troubles have continued to mount over for Facebook. These are not only high-profile exits. Really, is it a cultural issue, so to say? I mean, Zuckerberg had plans for unified apps, but clearly there is seeing some sort of resistance coming in.
Yes, it's not clear how the two events are linked. The announcements that Facebook will focus more on privacy on their messaging platforms and have features like interoperability. These announcements were made a few days ago, and from now the exits of the two executives seemed linked, but I'm not sure how much related they are. In the post that Chris Cox at least posted while resigning, he mentioned that he alluded to Facebook making this privacy focus shift for its messaging platform, but as far as I'm aware, there has been no certainty as to whether these developments are linked. Over the past, we've seen many executives quit Facebook over some internal decisions perhaps, and this have been the heads of Instagram and WhatsApp. So this, as Facebook acquires an important position in public discourse, I think some of these are the result of internal disagreements about how to go about or how much regulation the platform deserves, for example.
But I have an important issue to ask. Data privacy seems to be at the core of this entire, issue that we are seeing. WhatsApp founders have quit, citing differences over encryption. Then the data scandals. A lot has changed as Facebook over the last 2 years.
Yes, the recent announcements, though, I think we've seen many announcements from Facebook, so time will tell whether they will implement the spirit of the letter here. But the recent move has been privacy positive, in fact, I would say. They have said that the end-to-end encryption that powers WhatsApp messaging, they will extend to Instagram and Facebook. They will enable, I mean, we have to look at this from assuming from the lens that Facebook is doing some of this to benefit its own private business. But at the end of the day, I think the privacy focus shift on messaging platforms at least is a net positive. Earlier, what we had seen was that Facebook had promised, for example, when it acquired WhatsApp, that it won't use WhatsApp data for improving services, as they call it in their privacy policy, on Facebook. So they won't share data that is collected from WhatsApp for powering Facebook services. And this is in fact a promise they rescinded on. So that I saw as a negative development. The recent letter, however, I see as a positive step for ensuring communication privacy for millions of people.
But what is it that really worries you the most about Facebook? I mean, they have become a powerful medium. There is no denying that, with Instagram, WhatsApp, everything under their realm. Yet they're really struggling to maintain the top talent in the company.
Yes, absolutely. I think the power that Facebook holds in our public discourse is unparalleled, and I think this is becoming a political economy issue rather than just a technology and communication issue. And we've seen scholars like Shoshana Zuboff, with her recent book, The Age of Surveillance Capitalism, highlight several issues in the operations of companies like Facebook and Google. And I'll be fair and admit that even though Facebook has taken a privacy turn for its messaging platforms, it still hasn't answered the hard questions about why does it track users when they're not signed up to the Facebook service? Why does it track users across websites when they might not have explicit consent from these users? Some of the answers to these questions will come from the law, as we're seeing with data protection laws across many countries. And some of these solutions might also be technical or social, that we come up with solutions, technical solutions that from our browsers or apps that provide less data to Facebook, or allow us to give very fine-grained consent of what Facebook is allowed to see. And social interventions are also possible. And the most important issue perhaps is the competition law issue, because Facebook has really grown in size in the recent years. And I mean, Facebook will always act in its private interest, so we need regulatory intervention to sort of mediate what power Facebook holds.
All right. On that note, Gurshabad, many thanks for joining in and speaking to us on this. Let's quickly shift focus then to the weekly funding meter that saw some big deals this week alone. Say $250 million being raised by startups, largely driven by big fund raise by startups like Acco and Blackbuck and MS Swipe. To discuss more, we have Vartharajan from Venture Intelligence on the show. Vartha, thanks for joining in. Firstly, how do you see this week's weekly action coming in? A large number of deals this time around. Looks like fintech continues to dominate the space.
Hi, Ruchi. Good evening. Yeah, I think it's been a very strong week indeed, with $250 million, across 17 deals. To put it in perspective, right, the amount in that 1 week is more than the figure that was invested in February. And, you saw as many as 10 million plus deals invest in the week. That is a figure that you typically see, what happens in a month. But however, if you look at angel investments at still 7, still worrying. Just the number of investors are quite small. We are yet to hit that 10 deals a week is not yet happening yet. But the other important thing that that we noticed this week was B2B investments. Typically, you notice that the week is always dominated by consumer startups. Interestingly, 70% of the startups that raised funding in this week were in our B2B startups.
Absolutely. What really stands out for you in terms of sectors? And also, I mean, we are talking about how most of these companies that we've discussed, they have follow-on investments coming in. So which are the new startups that are backed by investors?
Yeah, so if you look at the sectors, right, largely a good mix between, fintech, little bit of, food and beverages, and as well as interestingly agri-tech. As far as the new investments that are happening, right, there's an interesting company called Ek Anek, which is a new startup which has raised, commitments of about $10 million from 3 top investors, including Sequoia, Lightspeed, and I think Matrix. Yeah. What Ek Anek does is they're building a platform for influencer marketing people, and they can connect that with consumer brands. So that's what they're doing. The second interesting fresh investment was in a company called Tartan Sense. So this is an agri robotic startup. They build robots which do weeding in cotton fields. They've raised about $2 million from omnivore partners and other investors. But interestingly, the startup also has the founders of Grey Orange Robotics also invest in as part of that round.
Right, on that note, Vartha, many thanks for taking your time out, as always, giving us a sense of what's happening in the startup world. With that, it's a wrap on this edition of Startup Central. Many thanks for watching. Do stay tuned. News now coming up on the other side.